Jill is a senior executive advisor in GHD's advisory practice and has 37 years of professional experience.
Thank you very much for that. And I spoke a little bit in the previous session, so I will run shorter than this, so we'll be good. And I'd like to thank my marketing team who aren't here for making me seem like I'm an international concert pianist as well. I'd like to chat with you today about something a little bit different. I'd like to shift the dynamic. I work within a business where we talk with mining organisations on a daily basis, and we talk at a commercial investment scale. So the management consulting part of the business I'm in, we spend most of our discussions day in and day out are with bankers, they're with investors, they're with mining companies wanting to sell assets or seek investment, or mining companies wanting to buy assets, and or other investment firms wanting to invest in mining. So I'd like to chat with you today a little bit about the challenges that we see that these investors are bringing to the table. And I mentioned in the session this morning, there's not a week go past where we don't have a bank turn up with a few $100 million that wants to spend something in critical minerals, and there isn't an avenue for them to spend that. We define the critical minerals industry as four parts. It's important to understand this is the thinking that comes from outside the industry. This is the thinking that the banks and so on have, and the investment houses. There's the dirt. We dig up the dirt. There is the mineral resource itself. The tons and grade, the actual product that we've heard some people in the room and already this morning talk a lot about, and some in really sophisticated detail. There is the infrastructure part of the business, part two, and the infrastructure part of the business plays a significant role in a lot of the things that we do about developing our critical minerals business and having a successful critical minerals industry. There is the refining, and we've talked about that, and I'll mention a little bit about that as well. And so that is your mineral processing and refining, of course. And then there's the offtake user. So from the top down, we've got the dirt, we've got all the infrastructure we need to underpin what it is that we want to achieve. We've got processing and refining technologies, research and development, IP development and so on, and then we've got the actual offtake. None of those are independent of any of the others, and to be frank, a lot of the discussions we've had in recent times have been about offtake and offtake structures. Years ago in the mining industry, we'd talk about the fact that a successful business would have a good deposit, some cash to develop it, and then an offtake agreement. And the cash to develop it is the part I'd like to chat about today. You'll see there at the bottom, I've got each presents its own development challenge, but in a capital intensity sense, pathways 2 or items 2 and 3 in this chain are the ones that are significantly capital intensive. It's also important to understand, while I've characterised those into four areas, as I mentioned before, this is how the investment houses characterise it as well. This is how they understand things. And most of the banks we talk to are not particularly interested in buying a mine. They might invest in mine through super funds and things like that. But if they're going to invest, they want to invest in some infrastructure. All right, let me see here. We've got next one. Okay. So what do we call success? The challenge is to have these four market sectors successful. From a minerals deposit perspective, we've got commercially viable deposit and successful ability to extract that material. But then we get to the two key pieces, the infrastructure, logistics, supply chain. In an Australian context, we heard the other day, Thursday I think it was, Prime Minister Albanese speaking in Brisbane about development of manufacturing industry in Australia, and that leads also to development of some critical minerals or energy minerals, offtakes and so on. A key part of this, and there's going to be no development at all without money, absolutely none. We did some research. About a year and a bit ago with some very significant bodies. We looked at a bunch of mines across Australia. We looked at mines that, and we're talking about mines that are at the PFS, DFS, and production phase, not just exploration deposit work. And we looked at these, and of the 20 that we prioritised, we looked at about 70, but we prioritised 20 of those. All 20 of them did not have a power supply, a road, a rail, or a water supply within a 50-kilometre radius of their asset. So to bring water 50 kilometres, to bring power 50 kilometres, to bring rail or road, and when we listen to what Phoebe's saying, by bringing rail, we can't have diesel trains doing this anymore, and battery trains aren't mature enough yet. So we're talking about electrified rail. When we talk about energy supply, when we talk about mineral processing, we're talking about having a genuine high voltage energy supply. It costs anywhere between $20 to $100 million per kilometre to build a railway line. And that price variation is largely to do with terrain and energy supply and so on. But let's say we're in the middle of the range. Let's say $50 million per kilometre for an electrified rail line to come out to a site where you're developing a mine, or even if you want to build high quality roads out there and bridges over rivers and or tunnels. This is expensive. It costs about $500,000. Sorry, it costs about $500,000 a kilometre for a high voltage power line. So you want 220 kVA, you're talking $500,000 a kilometre. So when you're going 50 kilometres for road and rail and port, and once you get over about 2 million tonnes per annum and about 60 or 70 kilometres return journey, dirt roads and trucks aren't economic anymore. It's actually cheaper to start to develop other forms of transport. So the challenge in developing our critical minerals industry, certainly it's important for us to identify deposits and identify really high quality commercial grade ore that can be subject of a successful offtake agreement. There's a substantial amount of infrastructure that needs to underpin that. And then there is the IP, the skills, the research and development and the technology to process your mineral ore. I said this morning that I was of the view that developing or refining your mineral ores and so on would be something that should be done through a cocktail process. We can't wait 10 years to build railway lines. We can't wait 10 years to build roads and on top of all this, then you've got ports. If we take the Northwest Minerals Province in Queensland, we look out near Mount Isa. We've got a railway line out there, but we don't have a power supply. It's a couple hundred kilometres or more out, or a few hundred kilometres more out from Townsville. So at $500,000 a kilometre, what's a power supply going to take? Then the rail, well, the rail can't be diesel. It needs to be upgraded. It needs to be electrical supply. You get it then to Townsville Port. Then you've got port development, port infrastructure. And a lot of the critical minerals we produce, they go out in bulk bags. They don't go out in 10,000 tonne ore trains like we see up in northwest and Western Australia where iron ore goes out. We heard the comment this morning about dig and ship. Some of these materials, you don't dig and ship them in a traditional sense. Australia needs to have a mental dynamic shift about this as well. We look at processing at a rare earths facility in China, and we don't have people walking around in fluoros and moving excavators and things like that. We have a giant building with 400 guys in lab coats and hermetic air supplies. It's a totally different dynamic producing the material, and the investment capital required for that is incredible. We have the banks. The banks turn up. We've got $400 million we want to spend. I said to one bank, how much do you want to spend? And they said, we got $2 billion $2 billion they've been instructed to go and invest in the critical minerals industry. Where's the projects? There was not a single road, rail or port investment-ready project in Australia, and if we started tomorrow, it would take at least a year to get a business case together to start to develop one, assuming that all the relevant parties of that fall into line. Now, I've introduced the concept here of a hub. There's great power in not going alone on things. Our critical minerals industry, we do have some useful clusters where our minerals are deposited, and we can get infrastructure to areas where there are several mines that can benefit. If we get 5 or 8 or 10 mines that can benefit from some infrastructure development, we get Albanese and the relevant governments and so on to back the things they've been saying about investing in industry. They start to show some support around green, around reducing red tape and progressing approvals to develop these assets. And then we can start to build the water supply, we can start to build the power supply, we can start to build the railway line and the port and so on. But we're talking hundreds of millions of dollars, and most small mining organisations don't have that sort of capital lying around or even access to that sort of capital on long-term structures. And these banks are willing to put these, or the investment houses, sorry, it's not just banks, investment houses are willing to put in not only debt finance, but they're willing to put in equity finance as well, to take a stake in something for 20 years. We had an example where we were approached by an organisation we were talking about energy supply. There were 10 miners. This was in Western Australia, by the way. 10 miners in a sort of a geographic cohort, all of which did not have a successful energy supply. So we spoke to one of the big energy companies and we said, well, how about you guys turn up? How about you bring the capital along? How about you I'll move along while I'm talking about this. How about you turn up? We go and get the 10 mining companies. You bring $200 or $300 million capital. We'll put a renewable energy supply into each of these mines. We'll provide the sort of carbon benefit footprint they need from their electricity supplies, so that people like Phoebe will be happy with what they're doing. And then you set up a tariff structure. We get it guaranteed by the state government. They sign 20-year offtake structures. Energy company turns up, and maybe the energy company doesn't bring the capital along to develop that. Maybe they secure that capital in the global market, so they get $300 million or whatever it is that's necessary, and they put that energy supply out, and they build that energy supply out and put it out there to those 10 mines, and the miners sign up as a cohort, as a group. So there's immense power in this hub notion, and we have had a lot of discussion with the federal government and with the Critical Minerals Office around the hub development structure, and we have prepared quite a few studies for them about this, and it certainly has some economic benefit. And we have found that when we start to talk about getting cohorts of miners together, and we start to talk about what these hub structures look like, we have found that the bankers and the investment bankers and the bankers are a bit more excited about having a number of mines that may contribute to some, or mining companies that may contribute to something. They're happy about negotiating with transport organisations. They're happy about negotiating with port authorities, so that the infrastructure that is necessary to underpin the development of a critical minerals industry can be matured, because we have the greatest endowment on the planet, I would dare suggest, in Australia, but there's not much material getting out of the country without a significant amount of capital investment. And I'd like to leave you with an example. Australia and Canada, and I've got some colleagues in the room here that have heard me talk about this before. Australia and Canada are similar countries. Both countries have significant mineral endowment. Both countries have significant critical mineral development opportunity. In Australia, our critical mineral development opportunity is a lot easier. When you're in Canada and you're on a highway, if you want to go to a mine site or develop a critical minerals mine there, the minute you turn into the trees, you're going up, 12,000-foot mountains and over rocky escarpments, and development of infrastructure in Canada is considerably more challenging than it is in Australia. So we have a benefit. If we get ourselves organised in some groups, and there are some natural groups, you look geographically at our country, you can see where those groups are. We can invest in that infrastructure, and we can take on the world. The other part is the internal consumption piece. You develop these facilities in Canada. You've got significant capital infrastructure to invest. They've also got to deal with tundra and icy terrain as well as mountainous and geography. But the other thing is they have very, very high internal consumption. So Canada and the US, they've got ready-made markets there. I have heard some discussion from some ministers in the Canadian government that don't want to export their critical minerals. They're of the view that they should develop their critical minerals and consume them themselves and with their partners in the US. Australia, we don't have the level of manufacturing that the US and Canada do. So producing our critical minerals means producing them at least for the foreseeable future. I appreciate what the federal government's trying to do about developing a manufacturing industry. That's really cool. But we need our critical minerals industry to move very fast so we can take a position and maintain a strong position on the world stage. So that means for us largely an export product. So we need to get our infrastructure in place very soon, and we need to benefit the country and our critical minerals industry from having that investment in that infrastructure. So I would be imploring upon any of you that sit in any of these areas where you've got quite a few close neighbours to have a bit of a chat around what are your infrastructure needs. It's not just what you have yourself. It's what do you need. What, as I said, what water supply, what power supply, what rail supply, what road supply do you need? Because we talk about the dirt in the ground and we talk about offtake contracts, but we're achieving nothing without having those key pieces of infrastructure put into place. That's enough from me. Thank you.